Welcome to the Solution Nation podcast. My name is Sean Snowday, and I'm the president of Solution Nation. Solution Nation is dedicated to providing a platform for investors to learn about Israel's most dynamic public and private companies. We interview lead venture capitalists, Wall Street analysts, investment bankers, and managers of incubators and accelerators. Today's guest is Danny Cohen, who is a general partner at Viola Ventures. Now, Viola Ventures is dedicated to enabling Israeli entrepreneurs to build global transformational technology companies. Now, he has made invaluable contributions to Viola Ventures since 2013 and began his career as a developer and product manager at a few Israeli high-tech companies, including Commtouch and Scitex. He has a BA in computer science and psychology from Tel-Aviv University and an MBA from INSEAD. Danny Cohen segments the business-to-consumer industry into niches such as consumer internet, e-commerce, direct-to-consumer, games, and digital media. He provides key insights into scaling B2C companies, reserving option pools, setting founders and executives' compensation, the trend towards short videos, and fraud in the reporting of subscriber counts. Danny also reveals some of the secrets as to why Israeli companies have had so much success in growing B2C companies. Today, Danny Cohen introduces us to three fascinating portfolio companies: Lightricks, Worthy, and Faye. Please remember that all content provided on the Solution Nation podcast and website is for educational purposes only. Nothing shall be construed as investment advice. Investment decisions shall not be made based on information, written, verbal, or otherwise, posted or spoken on Solution Nation. Conduct your own research or consult with your own investment advisors before making investment decisions. So here's my good friend, the host of the show, and the CEO of Solution Nation, David Wanatik.
All right. Welcome, everyone, to Solution Nation. I'm David Wanatik. Today, we're going to have a very interesting podcast with Danny Cohen. Danny Cohen is a general partner at Viola Ventures. Danny Cohen has been at the fund since 2013, and his investments lie in everything associated with business to consumer, including consumer internet, e-commerce, direct-to-consumer, games, and digital media. Before joining Viola Ventures, Danny was with Gemini Israel Ventures. And before that, he began his career as a developer and product manager in a few Israeli high-tech companies. So, Danny, thank you very much for joining us.
It's great to be here. Thank you so much.
So I wanted you to talk a little bit about Viola Ventures, the kinds of investments the fund makes. I know you focus on B2C, but is the mandate for Viola Ventures broader than that? What stage do you get involved with companies? What's your average check size?
Sure. So let me say one thing. Viola is actually a bigger platform than just Viola Ventures. We have under the brand, we have a few different funds. So Viola Ventures is an early stage fund. We also have a growth fund, a fintech focused fund, and a credit venture debt fund. But the Viola Ventures, where I spend the majority of my time, is the early stage fund. Our current fund, Fund 6, is a $260 million fund. And we invest in Israeli companies, mostly seed and A rounds. I would say our typical check size would be somewhere between 3 to 10 million. Of course, recent years, that number went a little bit up. So average will be about 5.
Okay. All right, good. So on the website for Viola Ventures, it talks about other services that Viola offers. It talks about a global network. Can you expand on that? Is it more formal as far as what is done for the portfolio companies as far as helping them grow?
Yeah, I mean, look, we could talk a little bit about the challenges of Israeli companies, right? And of course, the number one challenge more than anything, I'll say two challenges, right, is being far away from the market. So the Israeli companies always sell into the U.S. market where they're, thousands of miles away. I think the other challenge, of course, is HR and hiring the best people, both in Israel and in the U.S. So we're trying to help on both fronts, and we try to do that in a formal way. So we have people dedicated to do or to tackle exactly those two problems across the entire Viola portfolio. And the network, really, we have a person that kind of coordinates the entire network of the partners. It's a big partnership with a lot of people. We know a lot of people. We're connected to a lot of people. So we're really trying to leverage that network and helping all the different portfolio companies with kind of collecting all the resources in the fund.
Does the network help portfolio companies beta test their products?
Yeah. Yes, we do that. It feels, again, when I look back at all the different companies, the initial kind of first sales is always a challenge. But I think the bigger challenge is the scale part, actually, right? And getting your first 2-3 customers is a little bit easier. You know people to call. There's always some kind of a smaller network the entrepreneur has to get their first product going between kind of the 3-4 customers to 20 or 30. That's where the big challenge is, and that's where we're trying to be helpful, to think about scale and open doors in a more systematic way.
Okay, so being aware of the scaling issues, is there anything you communicate to the management team? Is there any way you structure their ownership or compensation to provide the room to hire more people or new people, outside people that have maybe different skills? Some people are very good at taking an idea and turning it into, those first couple of sales, and then maybe different kind of people are needed to turn a couple sales into those 30 or 40 sales you're talking about.
Yeah, that's a great question. So, of course, at a high level, we try to be smart about the way we make deals and not taking. We want to take good ownership in companies, but not too much, right? Not too little, not too much. We try to be very thoughtful on how much allocation for stock options you put right into the seed or A round to make sure you have enough to allocate to new people. But I think the most important thing is to try and analyze the management team and look at their strengths and weaknesses or gaps and make sure there's an understanding between you and the entrepreneur and what we think or where we think the gaps are, and to agree with them that those are the real gaps and then hire for those, right? Because as you said, there's CEOs that are fantastic business people, but are not great at product strategy. There are people that are great operational. We need help on maybe long-term strategy. And of course, there are great product technical people that need a little bit help in opening doors and getting first sales in the US. So it depends on the situation. We try to be helpful, have enough ease up for hiring and help in hiring.
What is common nowadays as far as setting aside options pools for employees?
Varies, of course. Every company is unique. If I need to throw one number, 10% maybe kind of as an initial pool. Sometimes a little bit more, sometimes a little bit less. It gets a little bit more complicated once companies are much, much bigger. But as a general rule, when we do a seed and A round, I would say 10 to 15%.
Okay. And you run across issues that initially you try to keep your employees, you try to keep the executives running these startup companies hungry, so don't compensate them too much with cash. But then they have an issue where they need to hire a very good marketing executive that was making very good money, and you have to provide them with good compensation. In those situations, do you elevate the CEO's compensation to match, that CMO that comes on board, or how do you work it where the CEO is making $100,000 and the chief marketing officer is making $300,000? Do you have situations like that?
Yeah. By the way, it's hard to make $100,000 and make a living out of that, especially in New York, I think, or California, or Tel Aviv. I would say that. Of course, we run into many of these issues. I think great CEOs understand that they're in it for the long run, and they have equity that will make them very rich at the end. And they have way more equity than the hired CMO. So there are many situations where the CEO is definitely not the highest paying person in the company. On the other hand, there are founders that have families and they live in New York or they live in Tel Aviv and they need to make a much higher salary compared to others. So that's where we benchmark and we look at situations, but overall, dollars being given to CEOs in our portfolio vary dramatically. But again, I think good managers understand that it's about the long-term game, not about monthly salary.
Okay. I just want to go back to a couple of things about Viola. It seems like from your website, you provide financial services to your companies, like debt providers. Does that mean that the debt is coming from Viola, or do you sort of act as an investment banker when needed, introduce them to lenders that may be needed to put funding into the company?
Yeah. Okay. I think overall, it's a little bit less sophisticated. I think when debt is needed, there are very few debt providers in Israel. Viola is one of them. Silicon Valley Bank, Kreos, a few others. There are not many. So when you map out kind of who are the debt providers to the Israeli high tech, I think it's less than 5 that take 95% of the market. We know them. We introduce them. I wouldn't say that the Viola credit is a big one in our portfolio because different companies have different debt needs. And again, I don't think right now it's important to get into the differences between what Silicon Valley Bank provides and Viola Credit provides. But I would say that actually the vast majority of our companies, when they take pure, straightforward debt, actually take it from the banks more than they take it from Viola. Viola is great for lending to fintech companies. I think that's the majority of their business.
Okay. And then last question about Viola. The website mentions a dedicated BI business intelligence team. Can you talk about that? And does this team produce reports that are sold outside of Viola, like Gartner does?
Our business is the investment side, so we don't sell anything to anybody. I will say our BI team does have a lot of reports that we issue. We just issued kind of short advertising. Just yesterday, I think we issued our semi-annual kind of Israeli tech report about kind of overall trends in Israel investments. By the way, major change, not surprising, in the 6 months of 22 compared to 21. And we have a huge database of all the Israeli tech companies. We follow all rounds, and we help both LPs but also entrepreneurs look at different data segments. We look at pricing, we look at market trends, and again, it's all service to both our entrepreneurs and our LPs, and I think it's part of our value add.
Does the BI team compare different technologies in a given class? Like, does it compare cybersecurity companies?
Yeah, I'm not sure I understand the question. We don't look at product at all, right? It's really just mostly about business trends, investment trends, mostly, right? Okay. Will they look at? I think we look at comp. We look at we look at investment trends. We look at pricing trends. We look at different areas like that. We did a great work around comp of salespeople in value and usage-based pricing, which has been a major I would say hit among portfolio companies. So again, just different business problems that we try to look at.
Okay. All right. So let's talk about your area of expertise, business to consumer. Why do you like that space so much? And maybe talk about the Israeli angle too. Several years ago, people would say that Israel's great at technology and so forth, but not so much marketing. And marketing is important when you market to consumers. So,
first of all, I've always loved B2C. I think the reason I like that is I see myself as an active consumer, right? Always love shopping. And I think it's just more interesting on a storytelling side, and I love marketing. So all these areas are just very close to heart for me. Post business school in 2000, I went to work for a consumer internet company and kind of fell in love. So it's just been an area that's always been very, very interesting for me. I think historically, or not historically, overall, people see Israel as great on technology side, and and very strong in areas like cybersecurity or DevOps and B2B. And it's because Israel is known for its great technology talent. But when you look, Israel had great success in certain areas in games. Real money gambling and other areas. Games has been an area where Israel produced major success stories. And one of the areas in games that will make you win is the ability to move fast and be good in marketing. So some great performance marketers really kind of emerged in Israel. And as marketing shifted from just brand marketing, kind of the Procter & Gamble style of go-to-market, to that performance marketing, being smart and very technical and how to do that on Facebook and Google, that created that ability for Israelis to leverage their technology talent to apply that into marketing. And we look in the past few years, some amazing B2C companies emerged here, some excellent success stories across different areas. And we try to take part in that, in different categories in that area. And I think it's a great way to make money. By the way, we'll add, from a pure return perspective, I think the risk in B2C is higher, meaning the overall number of success stories per number of tries is lower. But when a company succeeds, those are major hits, right? So a lot of the unicorns are consumer companies. And we see that in our own portfolio, but also in other companies. And that's why we try to blend our overall portfolio with some of these companies, because we think that as an outlier strategy, that's a way to gain access to outliers.
Mm-hmm. Do you think a large part of Israeli companies' success in B2C is a function of their ability to analyze data, to analyze what works in different communities and different customer segments, and to modify things based on what the data is telling them to do?
Absolutely. I think that is key. I think great consumer companies collect data, analyze the data, and understand and make fast responses based on the data. That's the name of the game, right? And we push companies hard to look and understand that. Even simple things as understanding that it's not about monthly revenues, it's about cohort analysis, right? So just making consumer companies understand that it's not about what you make this month, it's about the cohort that you bought, what is the overall revenues that you make across that cohort for the entire lifetime, and really analyze and have a deep understanding of your acquisition cost versus lifetime value, to understand what churn means in consumer companies versus B2B companies, major differences. People ask me a lot. They say, look, consumers is like investing in a movie. I said, absolutely not. It's completely different. And one of the reasons it is different is because a movie, once it's out, right? That's the, a complete movie, and whether you like it or not, that's the end of the game. In consumer product, you put it out of the market, you get data, you iterate, you change the product. And your product can be completely different a year into it because of what you learned from the usage of your consumers. So it's very, very different than a one-time production like a movie, based on the data, right? Right.
It must be difficult to determine which companies to fund to help them scale. When you're dealing with consumers all over the world, it could be exorbitantly expensive to do all the marketing to get the product in front of customers all over the world. On the other hand, if you start in a very small market like Israel and you have some success, you could be doing research for a bigger competitor. A bigger competitor can see what worked and copy it, because it's hard to protect these ideas with intellectual property. So how do you determine which companies to put a lot of money into to help them scale?
Yeah, that there's a lot of questions in what you just said. First of all, I think it is challenging. It's hard. It's hard to know who a winner will be. And I've definitely missed some opportunities because I didn't see the value, and then there are others that I made a bet and that didn't work, right? I think there are barriers to entry in consumer. They come from other areas than pure technology IP. I think great consumer companies do something smart on marketing, and yeah, marketing can be copied, but it's the subtleties that work, right? And sometimes very fine storytelling or some hack or some growth hack, it can take you very far for a long way, and will give you a protection in the market. Maybe not long term, but definitely as a base to create more usage and build more customers. And more than anything, how do we determine? We try to analyze initial data of customers, understand their marketing strategy, understand why they think they have differentiation, and then based on that, try to make those early bets.
So when you have success and you invest in a company that's just blowing up, just expanding very, very rapidly, what parts of the business do we not appreciate enough and not invest in enough? And you got to have a lot of back end stuff going on to make sure you can sustain the growth and accommodate all that traffic that's going to the site. So do you have to remind companies to invest more in security, in bandwidth, and what goes on in the background that we want to make sure we don't overlook to sustain that growth?
Yeah, I think you answered that question before, right? Data and being smart about data and data infrastructure. That's the big one. And why? Because the most underappreciated area in investing is marketing by far. So many times I meet startups, they put all their energy in why they have this amazing product. And then you ask, well, what's your marketing strategy? And they say, oh, well, we buy on Facebook. Okay, that's good, but everybody can buy on Facebook. So do you have an edge? And the edge comes from being innovative about it, and comes from being very deep and creating a massive, strong, deep, well done data infrastructure. And by the way, we see so many data startups coming up, and they say, well, companies need more help in creating the data infrastructure. It's not an easy problem. And that's why there's so much innovation going on in helping companies create that. And still, I think that good companies that do a good data infrastructure have an edge over competitors.
Mm-hmm. You brought up a good point about platform dependency risk. If your company's marketing is solely dependent on Facebook and they shut you off, you have a serious problem.
Huge problem. But that's part of the world we live in, right? It's everybody's dependent on Apple, on Google, on Facebook. There's no way around that. Or I would say there's no way around it, but it's very hard to go around that. And there are stories. By the way, Shopify is emerging as another platform, and they're also have their rules of engagement. And it's part of this cost of doing business, right? And we need to understand these platforms. We need to be smart about them. We need to work with many of them. But that is the world we live in right now. There's nothing else I can say beyond that.
We talked about the importance of data. Does it help that Israel is largely a nation of immigrants? So, there's a lot of French people, Europeans, even South Americans, of course, North Americans and South Africans, Australians. Does that help understand the nuances of catering to the different markets, or do you not need that because you can interpret the data?
Yeah, you can interpret the data, but having immigrants here is very important. I have an example. Actually, the last investment I made when I was a partner of Gemini was a company. It's also a unicorn, I think, today, called Minute Media, and they started from a platform for soccer leagues across the entire world, and they needed people in all the different languages to write content on the different soccer leagues. Again, it's a global game. They actually had the ability to hire a content writer for soccer in every language and every country, all based in Israel. So I thought back then it was a very colorful example of the land of immigrants. Absolutely, that's a big, big positive. It's an asset that we all leverage here, but it's still, it comes with analyzing the data, not as a replacement for that. I also want to say one other thing. There's a big, overall, I think the world is becoming, from a consumer perspective, becoming globally Americanized. I think when you look at a specific mall in any country, it looks more and more American. When I was a kid, grew up in Israel, spent a few years in the US, the difference between Israel and the US back then in the 70s or 80s was huge, right? Like there were all the US brands were not here. Now, when you go into a typical mall in Israel, it looks exactly the same as a mall in New York. And that's not an Israel thing, it's a global thing. And that helps, I think, consumer marketing, because your ability to understand consumers globally is way easier in today's world than it was 20, 30 years ago.
Okay. Maybe we can talk about a couple of the segments. So you mentioned games. Anything else you want to say about what you like in games, and maybe specifically what's going on in China? Did they still limit the amount of hours kids can play games? I remember.
Not a China expert. Don't follow that market too much. I will say. By the way, our games companies do. I think they sell globally, but I look much more at the U.S. consumers than I follow and understand China. From a games perspective, Israel is very strong in casual games. We built a strategy where we thought that games is an area where it's very capital efficient and great talent in Israel, but it's really hard to make bets on one single player. So we created a specific fund called V Games, which we started with a very talented guy called Eitan. Huge success, right? I mean, we were a little bit lucky on timing. We launched that fund a few months before COVID started. But he already raised 2 funds and unbelievably successful. And he has some amazing companies out of that fund, which again have a straight impact on our returns as well at Viola. So that's something I'm personally very proud of and has been very successful.
Okay. Any interesting developments going on in digital media?
Yeah, digital media. So 2 parts. I think investing in digital media is a little bit hard. I do think that the world of publishing is changing fast, and there are opportunities. It's a segment that is overall a little bit overlooked by investors right now. So VCs, us included, are not spending time in that category. It is an opportunity, actually. I think in the right team, in the right space, you could potentially make very good returns. But most of the digital media companies right now in Israel are actually not VC backed, which is an interesting trend. We have on kind of digital media advertising related, we made a few bets over the years, very, very successful ones. But right now, kind of a little bit more cautious there.
So digital media companies in Israel are generally not VC funded. Where do they get their money? Where do they get their capital? Yeah,
so I think digital media is an area where actually you can bootstrap nicely, right? You can make money very, very fast, very quickly. Again, it depends on the category. So I think you see some companies that just create these media companies where they have easy advertising solutions on them, very smart content production, and you have a business running that creates real dollars, and you don't need much financing. There's a question, what is the overall value of those companies? But definitely, again, as I said, I think we're watching that because there's definitely opportunities there.
So it seems like there's a trend for shorter videos, less YouTube-like programs and more TikTok-like very short videos. Facebook has Reels, and do you see that the attention span of consumers is shrinking, and is it a challenge to cater to that reduced attention span?
Exactly. That's why we need to have short answers, right? Because attention span is small. Look, absolutely. I think it went from, I don't have time to read, I have time to watch videos. Now I don't have time to watch videos, I'll watch short videos. Where's this going next? Hard to say. Absolutely. I think this is a big trend. TikTok is winning. Reels is really interesting. I think the whole creator economy and what you can actually tell in a story in a short video is remarkable. We'll probably talk more about Lightricks. Lightricks is one of my personal best investments. Is a company out of Jerusalem that has a video creation platform, image editing platform as well. And people use Video Leap, which is one of the major Lightricks products, to create some of these short stories. And really, that's where the world is going from a marketing perspective, from a media perspective. And we're going to see more and more startups emerging around that whole short video phenomenon.
Okay. Is there a lot of fraud with digital media companies as far as the number of subscribers they report, number of users? Is there a lot of tension with the advertisers that are afraid they're overpaying because of inflated subscriber numbers?
I would ask that question differently. Is there a lot of fraud in the world? I think the answer is yes. There's a lot of fraud where there's money. Yes. There's a lot of fraud in advertising. Absolutely. I mean, we can argue what's the real reasons behind Elon Musk kind of Twitter kind of breakage, right? But part of that, at least one of the official comments was about what is the actual number of users, the number of bots, advertising above the fold, below the fold. I mean, there's so many issues there. And as technology world continues, we're going to see a lot more issues there. And I think, we hope that our beyond that noise, the companies we invest in have real customers, real revenues, and make real dollars. And it's important when we look at our companies to try and understand that they understand what is real and what is not. But absolutely, fraud will continue to be with us for a long, long time.
I was going to ask you what percent of Twitter subscribers are fictitious, but I won't put you on the spot with that.
No, look, first of all, I don't know. And to be honest, I don't care. I have a few thousand Twitter followers, although I'm not as active on Twitter as I used to be. How many of those are not real? I assume a lot of them are not. But again, I think it's a big problem, right? And again, I think where we know this again, you're putting on the cyber hat for a second. Everywhere there's money, there's tons of fraud, right? Tons, a lot of bad actors in the market. And part of what every company needs to deal with, and you kind of mentioned that a little bit, put the combination of smart data, but also being smart about what's real about your customers and what's not.
Is there any way for somebody like Elon Musk to really determine the extent of fictitious subscribers? There's all these privacy laws, and the privacy laws limit how deep his people can dig into Twitter to grasp the extent of fraudulent users.
I think the answer is yes. I also think that, do you really think that Elon Musk didn't know that there's, not all users reported or all? I think there's a lot more underneath what we're being told. But again, not by the way, not from a conspiracy point of view, just from he wanted to do a business deal. Now, then he decided not to do it. I mean, there are many reasons behind that. I don't think he was surprised or anything really kind of appeared that he didn't see before, but I could be wrong.
Okay, maybe we can talk about three of your portfolio companies.
Sure, I love that. Again, I'll mention kind of three consumer products across our portfolio. I'll go one big, one medium, one small, kind of be nice also from a life perspective. So I mentioned Lightricks. Lightricks is a company out in Jerusalem. I think it's an amazing company started by 5 people at a Hebrew university, actually very technical initially. We're very smart on marketing. They have 2 main products or 3 main products. Video Leap, which is a video editor product, all on mobile, Facetune, which is a facial editing product for selfies, and Photo Leap, which is a photo editing app. They sell over $200 million of revenue a year. It's worth north of $2 billion. Massive company, very successful globally, market leader, and many awards from Apple through the years on some of their products. And they're now kind of expanding into that whole creator economy, that whole short video that you mentioned, and riding that wave where people are producing content not only for kind of their small circle, but really trying to push that and make money on top of that. So it's a big business. It's a big company. It's a huge success story, again, out of Israel, showing that people can be just very smart and create a global player without being an expert in consumer before doing that. So it's really a company that I'm very proud of and I love.
Maybe I missed it. Does Lightricks work with animation? And secondly, is it still private or is it public now?
No, it is private, and animation. It's mostly video editing, right? It's basically you take a video and then you try to make, as you said, kind of a great short story out of it. They actually launched now, since I think the ability to create a strong video is hard for some people. They actually just launched templates, which is a very easy way for people like you and me, or maybe not you, but me, to create a compelling video without being very artistic. So I think they're very smart in the way they look at the development of creativity for consumers. So that's one. Second one is a company, medium size company. Shlomo, my partner, is on the board of, called Worthy. They are in the category of resale, mostly around diamonds and mostly about wedding rings. They actually, I think their main line is for divorced women to sell their engagement rings. It's a big category, and they're getting some real success. They had some good breakthroughs by doing kind of old world advertising on radio and TV beyond online advertising. So it's a fast growing business. And again, part of, I think, what we're going to see in recession is we're going to see people more and more selling their own goods and just taking those diamonds and putting them back into the system is actually even good for environment, right? Because the usage of existing diamonds versus digging diamonds out of the ground is much better, both from human rights, from environment, other areas. So I think there's a good cause behind it and a very fast-growing business, and we're kind of optimistic about that one as well.
I'm sorry, what was the name of that company?
Worthy. Worthy.
Okay. All right. Very interesting. And I guess diamonds don't degrade, right? You can wear it on your finger for 50 years and there's no degradation of it.
Oh, absolutely
right?
not. By the way, those diamonds have been in the ground for thousands of years, right? You only take them for the last, few years, right, after they've been in the ground for so long. So they last forever. And it's interesting because De Beers had a huge campaign years ago, Diamonds Are Forever. They are forever from from a chemical part or from but they're not forever from a pricing part, right? So actually reselling them sometimes is hard to get the price you paid for it. And I think worthy is good because it gives relatively good dollars for the seller and gives an opportunity to reuse the diamonds in the market.
Okay. All right, great. Third one.
And one last one, a baby one. Again, one of my partners did, Omri. It's a company called Faye, Faye. It's in the emerging category of travel insurance. So again, it's a consumer play offering travel insurance for consumers in the U.S. mostly at this point. And the idea is when you travel, you need a insurance provider that does one, give you good insurance coverage, but also helps you kind of when you need to operate that or to use that insurance, to be smart about how you use it and really to get the most out of it. It's a very nice, clean app, both in the event of to buy the insurance and to use the insurance. It just started, early traction. We think it's an emerging category, good margin, so we're hopeful on that one. But that's a young baby relative to the others.
So just a quick question on Worthy. It doesn't seem like artificial diamonds have been that competitive with real diamonds. There was a lot of talk and concern years ago, but as far as I can tell, artificial diamonds haven't been terribly competitive with real diamonds.
I would agree with that. It's an interesting category, but I think right now, again, it's all perception, right? Perception is reality, and I think consumer perception overall is that they want real diamonds. What's going to happen next 10, 15 years? Maybe next generation won't look at it that way. It's interesting, right? They talk about the Americanization of society. The idea of taking the engagement ring was something that was popular in the U.S. for years. Now I think it's popular globally, right? So that's kind of something that emerged out of the U.S., maybe because of Hollywood. But right now, it's mostly people want real diamonds. What will happen in 20 years? Hard to say. But I agree, right now, that's the reality.
And just on Faye, it would seem like they're in a good space because of COVID. You travel somewhere and you think you know what the rules and regulations are of the country you're visiting and your home country, but that can change in a couple of days. And I don't know exactly what Faye does, but maybe they can insure you that if there's out-of-pocket costs for testing or what have you, that they'll help you with that. And so maybe COVID is a good thing for Faye.
Yeah. First of all, I think travel right now is booming, right? I mean, the world is collapsing because of travel. There are terms like revenge travel and other. Absolutely, I think people understand the potential of travel, or maybe we all knew that, but also the issues that can be concerned when you're away from home. And COVID really just showed us beyond COVID itself is that. What surprises can happen, right? And there were so many stories when COVID started where people were somewhere or out there and suddenly got stuck. My own daughter had COVID in Colombia or in Guatemala. It wasn't an easy thing for her. So I think having a good travel insurance is something that people understand more and more the need for that, and that's what we're betting on.
Mm-hmm. And it's a play on this organization, the airlines, with the mandatory vaccinations. A lot of pilots didn't want to go through the vaccinations. So you have a lack of pilots in a lot of countries and, not too much demand and flights get canceled. And so I'm sure there's good work for Faye to do in travel insurance. Anyway, the last question, looking at a potential economic slowdown around the world, which segments of B2C are least at risk of a serious economic slowdown, and which segments of B2C could be most adversely affected by general economic slowdown?
Wow. I want to say something smart, but it's hard to say, right? It's hard to say because I think consumers in slowdown react sometimes in surprising ways. So it's not always logical. Overall, we think that the emergence of categories around saving or reuse or where you can get more for your existing dollars, of course, will have a better chance in an economic slowdown. I will say that I just had an interesting conversation with an entrepreneur earlier this week about does travel slow down or grow in hard times? And he mentioned how travel actually holds up even in economics, hard economic times. So I think it changes, and there are different categories that are surprising that will hold up. But overall, it's what we're going to see is that where consumers can delay purchasing, they will, and that will have an impact on the nice to have versus the must have.
Okay, great. Danny Cohen, thank you very much for doing this podcast with us. I hope the viewers realize that these are difficult interviews that I conduct. They're tough questions, and I put all of our Israeli venture capitalists through the baptism of fire. So you've been baptized with fire.
Yeah, no, David, this was it's early in the morning, and I was talking. I was hoping for an easy conversation about what kind of companies you like and stuff like that. And these were good questions, hard questions, and I really enjoyed this. And I hope I was baptized well. We'll see what comes out at the end.
You did a great job. This was great. We learned a lot from you, and we really appreciate you taking so much of your time to talk to us and introduce us to different segments of B2C and introduce us to a few of your portfolio companies. Listeners can go on the viola-group.com website. There's a portfolio section there. You can look at all the companies. Some of these are public already, a lot of private ones still, but very interesting companies. All right, we can conclude the session here. Thank you very much, Danny.
Thanks, David. Thank you so much.